Will the risks of Bitcoin spread? If you're interested to find out, please keep watching. We'll start by taking a look at the daily candlestick chart. We can see that since the price increase from $15,500, we've gone through 3 waves of trends. Here's the first, the second, and the third. We've been through about 3 waves of adjustments. That's 1, 2, and 3. It's a sideways adjustment. So now, we can differentiate the 3. Each time, the corresponding degree is different every time. All of them went up. But the degrees are different. The highest degree of adjustment is right here. For this adjustment, the ratio of this pullback compared to the price increase is already over 0.5, as you can see here. The duration of the bumpy ride over here, if we measure it, it lasted for around 90 days. That is 3 months. 3 months is already 1 quarter. The whole quarter was a bumpy ride. It lasted for 3 months. For the next 2 times, the degrees of pullbacks are a lot smaller. I think the bumpy ride should begin here. It's more sensible. So it lasted for around 45 days. This period of the bumpy ride lasted for around 45 days. Or you can say it lasted for 45 to 48 days. For the current bumpy ride, let's take a look. The current bumpy ride has so far lasted for around 25 days. You can see the order of the degree. This is the highest level, in terms of the magnitude of the pullback and the period. And then, hold on. This is the highest level of pullback. Up next, we have this spot over here. The pullback level of this spot is the second highest, which lasted for around 45 to 48 days. It's been 25 days so far. If the bumpy ride continues for another 14 days, that's 39 days, around 45 days. The duration will be on par with the previous bumpy ride. The magnitude of the pullback is only 0.236 of the price increase. In terms of ratio, this is a rather strong pullback. But you will notice that the duration is longer. As the bumpy ride continues, if the duration of this bumpy ride is the same as the bumpy ride over here, how should we analyze the degree of the trend? For the first price increase, this is its structure. If the duration of the bumpy ride is too long, the degree and duration are the same as before. For this trend of price increase, it's possible this is the first stage. After a second stage of pullback, the third stage begins. If this is the type of price increase, there will be a major cut for the highest point. This wave of price increases can reach. It could be around $30,000, around $35,000 to $36,000. Then, the trend ends. If the pullback level of this wave is the same as the one of the previous pullback, if this level and this level over here are the same, the highest point it can get is around $35,000 to $36,000. My expectation is that the level of this adjustment will be smaller. The degree is smaller. For example, throughout this price increase, there were similar adjustments. Like so. I hope this is the trend. The best way to predict it is none other than the duration of the bumpy ride. Over at this point, extended periods of oscillation won't benefit long positions for sure. If there is a swift breakthrough, it'll be great. There is another possibility, which is far worse than what we can expect. That will be we are still within this gigantic oscillation area. This price increase is only a process of distribution. Of course, the possibility that this is the trend is relatively low. If this is the trend, there is a situation that will greatly increase the likelihood of this distribution phase. After the price increase, the oscillation begins. And then, it goes down. This is a Bart pattern. It looks like Bart. This is the head. Right? Bart's head. And then, there are the eyes and mouth. Like so. A Bart pattern. This is what we hate to see the most. For the futures account, the previous waves of price increases were our chance. If you made any profit, the amount would be lucrative. And the price hike was quick. The positions weren't under any threat. How will the trend go over at this spot? The magnitude and duration of the pullback will greatly affect our expectations for this price increase. Based on the current circumstances, it's slowly moving toward a direction where it works against long positions. That is the case based on the situation. There is a situation that will mark the end of the pullback. You can see it. If the line is too thin, let me adjust it. If the upcoming trend shows there is a congestion area over here, and then there is an immediate spike downward, a leverage flush, then a second spike thrusts upward and goes over the record high, then I think the next bull market has begun. It means the bull market has begun. It's the same as what we do at this spot. After the leveraged position holders are shaken off, the next price increase will certainly begin. If that is what we have, I will hold onto my long positions and even add to my current ones. So if we run into this situation, it benefits long positions the most. Okay, let's go to a different time frame. Let's shift it to 4 hours. In the 4-hour chart, we can see that there are basically no bumpy rides here, and the price sticks closely to the line below the support of $29,900. At this spot, this trend is still working against long positions. Previously, when the line touched the support, what happened? The price bounced back up. It bounced up immediately. There was a new record high. Now, look at this spot. It stuck to the line. And then it stopped moving downward. There isn't any strong demand. I think this trend is very dangerous for long positions. The risks are greater. Therefore, if it falls below the support, or it's falling for real, if the second and third candles don't close above it, there will be huge risks for long positions. Over here, there is a head and shoulders pattern. There is one over here. The neckline overlays with the S/R reversal level. This spot will be the most critical point. Be sure to pay attention to it. If we shrink down the time frame further, it will basically be meaningless. The volume is small. The fluctuation is small. They are in the same area. Further analysis of the 1-hour chart is meaningless. Alright, thank you. You're welcome to like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. By the way, if you're interested in trading, feel free to click the Bybit link below. By completing the KYC process and depositing $100, you will receive a Bitcoin contract position worth $1,000. It's a real position. If you make a profit, you can withdraw it. It's okay if you lose money. You got the position for free anyway. You are welcome to click the link and sign up to receive a free position. No waiting is needed. Thank you so much for watching. Bye-bye.